After a lackluster first quarter, McDonald's global mandate is to focus on improving operations. In fact, Don Thompson, the president and chief executive officer of McDonald's Corporation, said that he doesn't expect economic improvement in the short term, but McDonald's must focus on operation efficiency. As a result, the chain plans to introduce new menu items throughout the year and remodel more than 1,500 restaurants worldwide. In line with that, pressure on Asian markets is mounting, and India is undoubtedly a critical piece. McDonald's India has taken this signal very seriously, not only to ensure that India's contribution to McDonald's globally is significantly hiked, but also to ensure nationwide penetration from just restricting their outlets to the metros and big cities to Tier 2 and even Tier 3 cities. Tara Kapoor brings you the details.
Pop into a McDonald's in New Zealand and you can sink your teeth into a kiwi burger. In Thailand, you can actually get a bowl of McDonald's Thai curry. Down under, restaurants were renamed Makas, the Aussie slang name for the franchise for Australia Day. And back home in India, Ronald McDonald donned a pugri as the fast food giant rolled out two new desi-fied burgers, the Masala Grilled Chicken and Masala Grilled Veg. Innovations galore, coupled with localization, is what is keeping McDonald's on its toes, aiming to corner bigger shares in relatively newer markets.
There was a phase that we had when we started, we call it localization. The second phase was the build foundation phase, where number of store openings were not as much, but we got the business model right. The third phase was our grow phase, and we currently are in a phase that we call accelerate.
Globally, the fast food market has been going through a bit of a slowdown, and this is reflected in McDonald's global earnings that came out last week. Globally, sales decreased 1%, and in the US, sales fell 1.2% in the first quarter. As a result, pressure has increased on Asian markets, especially India and China, to contribute larger chunks to the coffers globally. China already has 1,700 outlets across the country, and India in comparison has just about 300. Not only that, McDonald's is also increasing the royalty of net sales to 8% from 3% by 2020 for Hardcastle restaurants, its India franchisee.
This is a market which, in terms, while on spend per capita is low, but in terms of productivity per square feet, the expectation is that it has a faster line of sight to the retail metrics which are seen globally, and therefore there is a high expectation that they will start becoming an important part of the global company's profits.
In terms of global operations, India is a negligible piece of the McDonald's business. I mean, they started out quite late relatively in India. They've only just got a proper master franchise agreement in place, which means they can actually accelerate growth from here forward. So it's not a question of what proportion of the business McDonald's is just now, but India will be a much bigger piece of McDonald's growth going forward. So I suspect over the coming years, India can be as much as 10% of McDonald's global growth going forward, which is why the market is so important and why they're putting so much effort behind it.
Hence, McDonald's is focusing on 3 Ps to push forward in the Indian market: product, price, and place. And for the global giant, retail expansion and menu innovations are taking center stage, as all its major competitors are currently playing the price game. In terms of expansion, McDonald's India is looking to double its number of outlets by 2015 and will be investing close to 500 crore rupees to do so. The idea is to continue its cluster-based approach in cities like Bangalore, Chennai, Ahmedabad, Chandigarh, Ludhiana and Kochi. Besides this, the company is also focusing on penetrating into Tier 3 cities like Trichy, Madurai, Nasik and Baroda as well.
We currently have about 161 restaurants open in West and South. Our stated goal is that by FY15, we want to be closer to 250. So clearly says that, what took us, sort of 15 years to do, we want to do in the next 2 to 3 years. 60 to 65% of all our new store openings will be in pretty much the cities that we are already there, while 30 to 40% of our openings might be in the Tier 2, Tier 3 cities.
At this stage, nearly 65% of all our products have been devised here in India for the Indian consumer. The Aloo Tikki burger, which has been there now since 2002, outsells every other product 3 to 1. So, you know, it's very clear that the innovation that we have done is really giving us big dividends.
In fact, the Aloo Tikki burger has been so successful in India that it is now being produced in outlets in the Middle East as well. And it's menu innovations like this which is the other key focus area for McDonald's as it attempts to expand further into the Indian market. McDonald's had the first mover advantage when it entered the Indian market in 1996 and as a result enjoys the largest piece of the pie in terms of market share in comparison to its competitors. However, the brand stagnated and as a result, arch-rival KFC began expanding in the Indian market at a much faster pace, growing its market share from 6.6% in 2006 to a sizable 18.2% by 2011.
I'd say Yum Brands, which runs KFC and Pizza Hut, is actually bigger than McDonald's in India if you count all of its brands. But all these companies are growing quite aggressively because the quick service restaurants themselves are taking a much bigger share of what is a really incredibly unorganized sector in India, which is overall restaurants. That's almost a $6-7 billion industry. So within that, McDonald's, for example, are a drop in the ocean. So I think you will see fairly aggressive, at least a doubling of market share from where we are for McDonald's, largely just based on store rollout alone.
With the QSR segment going through a slowdown currently and Yum Brands slowing down its expansion spree, McDonald's is using this as the opportune moment to go into acceleration mode.
It's a great time to expand, especially when there's a bit of a slowdown, because you would find all your inputs are available at reasonable cost. Is it your real estate? Is it people? Is it any other thing that you really want?
Currently, McDonald's India's contribution to its global parent is minuscule and stands at around 1%. Hence, the current target for the company is to increase its contribution to at least 5% by 2020.